What's up, guys? Man, what a week in this market. How awesome has this market been? Man, it's been amazing. It's been incredible. Pretty good week, right? I haven't had a good week like this since back when the market started tanking for the coronavirus, the COVID-19 pandemic, right? But let's first off let's start taking a look and let's do a weekly recap here real quick of the SPY. As you can see, this is where we were back when before the pandemic hit, right? When the pandemic hit, everything and everyone and their shares went down, right? The only thing that was doing really good were inverse ETFs for the indices, right? Like your TVIX and your SQQs and the SPXYs and things like that, right? Um, Man, or the I'm sorry, it was the UVXY is the one that I was hitting pretty often as well back then. But as you can see, right, we hit the bottom back here. Let's see. Why isn't my cursor showing up? There we go. All right, so as you can see, it man, it bottomed out back here in the middle of March, and then it's just kind of been roaring back, right? I mean, look, we are only what roughly 20, maybe 20, like 20 points or so, give or take a point or two, of being back to all-time highs, right? This market gave no shit about the COVID-19. Yeah, it kind of freaked out, right? And then it just said that, whatever, and it just kept roaring back, right? Plus, everything's starting to open back up now. Unemployment numbers came in. Unemployment's down to I think 13.5%, right? Which a lot of people are starting to go back to work, so that's going to change quite a bit. I mean, we were at what I think we were kind of either at or close to all-time lows with unemployment in this country before the whole COVID-19, even in spite of the whole impeachment bullshit charade. So again, man, Spike it gapped up big this morning, right? And again, my concern, right? And I said this if you watched my previous video for the watch list. Anytime you have a gap up in the market, it sucks a lot of the range out of your potential plays. Combine that with the fact that we had a lot of stocks on our liquid gainer scan that were showing day 4, day 5 plays, right? So they were heavily extended. My thought was is that I thought, hey, I didn't think the market was going to gap as much as it did. So my bias going into today was I'm still looking to long things, right? And of course, I didn't want to take a short bias just because, again, typically if the market was just kind of doing what it's supposed to do each and every day, which is kind of gradually grinding up, I could have taken some shorts on some day 5 plays, right? And we'll go through my watch list, and I'll show you the plays I took today, the things that I should have taken. But again, I didn't have much faith, and I didn't have much confidence in taking some of these shorts on day 5 plays because I didn't want to get squeezed. And for those that are unfamiliar with what a squeeze is when short sellers are betting that a stock will go down. They'll borrow shares from their broker. They short it, and once the stock gets to a certain point, other buyers will start seeing a value for a long position, and they'll start piling in, which helps drive the price back up. Once that happens, these short sellers, they start panicking, right? They start freaking out, and then they start buying shares back to cover the borrowed shares so they can return them to their broker. When that happens, right, now you have not just buyers that are buying shares, but you also have short sellers that are buying shares to cover back, which is driving the price even higher, even quicker, right? And then you can get a potential short squeeze. The problem is you don't want to be on the wrong end of a short squeeze, right? Because you could potentially lose way more than you put into your account if you're not practicing good risk management and using a hard stop loss, right? So again, SPY was really good. Here, we'll take a look at the TQQ real quick here. And again, pretty much same thing, right? Just ripping back. It is taking the TQQ a little bit longer to get back up here. I'm sorry, not TQQ, QQQ. Yeah, I mean, so the QQQ, it's back to where it was, right? It's already back to its highs earlier this year. So as far as the QQQ is concerned, we're recovered, right? We're back to where we were. It's business as usual, right? The SPY's been lagging just a little bit. It's been a little decoupled because typically the QQQ and the SPY, they're pretty much coupled in their movement, which means when one moves up, the other one moves up, and almost roughly, and not, again, it's not exact, but it's roughly the same percentage. It's not so much the same points. And then, of course, when it goes down, it also, in sympathy, it moves as well, right? And that's what we call a sympathy play: is stocks that are similar, that are in similar, that have similar characteristics, similar sectors, industries, things that are tied to kind of they're coupled with another stock, right? So let's say, for instance, if a pot stock, let's say like ACB, does something really cool and it starts jumping, other pot stocks will benefit from a move. Just like when Apple moves, when Apple is making some good money, right? When Apple's stock price is moving up during the day, other stocks will benefit from it. Okay, they're a sympathy play. Some companies that are doing offer similar products will benefit from it, as well as companies that make products that Apple uses for their devices or whatever. So again, that's what a sympathy play is. But again, it's been pretty hot, right? So let's go over. First off, the first trade I took today was I got out of my LK swing. I've been in this since 209. And again, the first two candles, it was nice, right? So it pushed up here. The first candle, I thought, wow, man, like this thing's gonna go, it's gonna roar back, it's gonna fill its gap at some point. And then it hit the 50 SMA, and then it just kind of started coming back. And I thought, wow, you know what? It may be time to close this position, bank some profits. But yeah, I got out around 6. I want to say about. I got out right here, right before it got to the top of this candle. It was about 648, around 648, 650. Banked some nice profit off it, right? I mean, I made over $4 a share on that. So you could have rolled, just as an example, right? You could have rolled 2,000 shares at $2, right? 2,000 shares at $2, and you get a $4 rip on a 2-3 day swing, right? You make $8 grand, right? Your week is done, right? Hell, your week, not only is your week done this week, your week may be done for next week. Like you might be able to take the week off and do nothing, sit around and watch reruns of Boy Meets World, or I don't know, Saved by the Bell, or whatever the hell you're all into. Yeah, I just talked about the reruns that I sit and veg on, right? For you younger kids, y'all can go watch some Riverdale. I don't know. I don't know to tell you. Gossip Girl. I don't even know. Are they even on anymore? Anyway, so that was good. My winner for my day trade today was this Chesapeake Energy. So again, we looked at this when we were putting together our watch list for from the night before, and I was interested. Right, this stock has gotten beaten down so bad from the coronavirus. It did a 1 to 200 reverse split back here in the middle of April, as you can see. Right, back here in the middle of April. Man, and this looked good, right? This looked good. And then, of course, the open, it didn't really give me what I was looking for. I was looking for an opening range breakout. And honestly, I didn't feel comfortable, right? I didn't feel comfortable. I was looking either for a pullback to the 9, right? Preferably, I thought I got a pullback to the 20, then, it would have kind of started filling this gap. I just don't do comfortable with those, right? I always, the fear sets in that it's just going to tank at that point. And I think that's what the psychology of a lot of other traders are. So again, I drew out my trend line here, and I just kept trying to watch it, right? So it pulled back here to the 20. Now this is where I kind of wanted to hit it, but again, this series of red candles didn't give me any sort of confidence that it was going to hold. So again, like any smart person, make a stock, prove that it's worth your time and attention, right? So all I did was I just went ahead and drew my trend line out all the way, right? I just said, look, if it gets back up here and it breaks it, I'll take it. It did. It broke this trend line here around 17. I think I got in just maybe a couple cents after. That's why you always have your trade tickets prepared ahead of time and anticipation. You got to have an imagination in this game. You got to be able to imagine where the stock can go. Once I get in here about a little over 17, it pressed up and then it started going sideways in consolidation. So I thought, cool, we got a nice bull flag here, right? If we can get a break, um, I might even add some more shares. But again, it broke too quick, so I didn't get enough consolidation to where I had faith that it was going to be something sustained. And then this push, man, it just pushed up, flagged out again, broke this range. Now, when we got up here, I knew that we were extremely, extremely extended. I mean, look how much gap you have. If you can put a thumb or a fist in between those, between your 9 EMA and your stock price, it's overextended. This is when you need to start thinking about closing your position. Typically, I like to scale out. Like I'll usually scale out halfway up. Like if I see a flag forming, I'll scale out, and then if it breaks, I'll re-add it back for additional risk. We should always be in the business of adding risk when we can and taking risk off when we can't afford it. But again, I just kind of let this one run because I had such a good result from my swing trade on LK. I wasn't worried so much about micromanaging this. I just kind of wanted to let it do its thing. If it won for me, it won for me. If not, I was playing with house money today. So that's what we want to be in the business of, playing with house money. And it got up here, and after this candle, I said, look, man, we're so high up. Next red candle, I'm selling. It got up here. It pressed up. At this point, I started watching my 9 EMA. And if you can see, right, you see this little dent right here in the 9 EMA? That was a signal to me that we're going to start going sideways, right? That's why we kept thinking, like, we're going to start going sideways. And sure enough, what do? We start, I mean, we're still going up, but we're going sideways, right? Now the price is coming down. Your EMA starts to kind of flatten out a little bit. Once you see this is the point where you should be out of your position at this point, right? This is your signal. Typically, if you see your 9 EMA start to flatten out, go sideways, you can almost be willing to bet that some sort of a dip is coming. Now, it doesn't mean it's always going to be a big one, because in this case, it kind of just gradually went down, and then it kind of came back up. But again, a nice rip, right? For breaking the trend line, just being patient. As much as I wanted to hit it here, I'm glad I didn't, because I probably would have played this one time today, and I'd have been done, and I would have been like, my day's over. But because I was patient and waited for an opportunity, and again, and this is really because I didn't short anything today that I really wish I had. This gave me the opportunity to be alert for this and capture this move. This was a monster move, right? If you got this, congratulations, you're a fucking genius. Forgive me for cursing. Signet Jeweler, I was looking to take this today as some sort of a swing, but again, I'm sorry, not Signet. Actually, I didn't take Signet today, but this is SRG. This was on my list, right? From last night. I looked for the break of the range here, because this gap up, it sucked a lot of my range out, right? If we had opened up here, look how much room we would have had, right? But again, you lose a lot of the range. So even if you got here, I mean, you could have bought maybe once it remounted to 9. But again, I mean, how much really would you have gotten out of this? So again, this was I was looking more for this as a swing trade. So again, it just sucked a lot of the range out for me. Not interested in any of that today. XHR. Hotels and resorts are starting to come back, especially with a lot of people starting to be able to leave and everything. I did take this one on an opening range breakout. I got in here roughly above, I think it was about 1230. 1230, got up here to 1350. This is when I banked my profits, because again, I just thought we were too far away, we were too extended, and holding it any longer would have just meant giving back profits. And then of course it starts giving back. It's almost back down to its opening range breakout price. So again, DFEN, right, the 3x the 3x ETF for aerospace and defense. This was another one I was looking for as a potential swing trade. A lot of these stocks, their problem is they were on day 5 moves, right? So while this one gapped up as well, sucked all the potential, really the range you could have gotten. You could have got in at 1926, maybe held it for a buck. But again, with the week being as hot as it was, I would have been very disappointed only getting a buck on some of these trades, right? I mean, you rip $4 on LK, right? And then you rip another $5-6, on another trade. You start thinking like, hey, I can take dollars, right? And we want to be in the business of making dollars to cents, right? You want to risk cents to make dollars. Risk pennies to make dollars. Save. Again, I haven't been ready to play airlines lately, but the movement this week has really kind of changed my bias on that. However, the gap up sucked all the range out. SPGI, Sinclair Broadcast. This is something I've been kind of looking for as a potential swing as well. But again, the gap up, it sucked the range out for me, right? It's still a potential swing for me, but the problem is, this is day 6, right? So if I wanted to take a swing on this, I should have been earlier. I should have been on day 1, maybe even day 2. So again, I'm going to need some consolidation or some pullback to the 9, preferably to the 20. Again, for those of you that are familiar with my videos and my patterns, my favorite pattern is a pullback to the 20 and a remount of the 9 for a swing trade. I'm 100% this year on my win rate for those patterns, right? So look for patterns where the price pulls back to the 20 and then remounts the 9. You've got some really, really good opportunities on those swing trades. UAL, man, what a slut, right? This thing, man, gapped up like $10, right? And then it's just it's already almost giving it all back. Man, it'd been nice to have a swing on this, right? But this is why it's important to realize we are in a swing traders market, right? With a swing traders market, man, you can buy stocks, all right, and you can pretty much hold them 1, 2, maybe even 3, 4 days. Wake up one morning and they're gapped up, and your day is done, right? Like your week, you made your money that week. So the problem is that obviously when you're holding overnight, you have the inherent exposure and risk that you can't control what the stock's going to do. So you kind of need to be able to hit those quick. But if you had gotten in this swing right around the on day 1 or 2, around the 28, 29 area, right? You could have held this for a couple days, right? Woke up this morning, been up $10. You could have sold out the first candle and done nothing. You could have sat around all day and had fun. But again, it kind of pulled back. So these things would have been great opportunities to short as well. Though, like I said before, the reason I don't want to short in this market is because the market's going up, and I don't want to get squeezed. However, there's some opportunities that I probably should have taken for shorts. I did not. This Spirit Aerosystems, man, I was looking to maybe take this as a swing. But again, I'm waiting for the breakout up here. But again, even if it does, it's not going to be sustained because look at where the move started. Many of these, like I said, are on day 4 or 5 moves. You really can't trust them that much. Again, this one here was looking for a potential swing on this. Didn't happen. Chimera Investment at a nice first candle, and then it just dumped, right? Not interested. Dust, I keep on my list every day, just along with JDST, JNUG, Nugget, for plays when I don't have opportunities that are presented to themselves. Viacom, I'm looking for a potential trade on this because I think we have room up at least until the 200 SMA. But again, I don't know. Didn't take a trade at all. HXL, great first push, then it dumped. I think I've seen that a lot today. A lot of stocks, right? A lot of sideways stuff, push up, down. It's just kind of, they're all going back to they're giving back their gaps, right? They're filling their gaps back. It is what it is. Penn, same thing. Nice gap up. Then it went red for the day. Then it popped back up green, right? Popped back up green, and then it just rolled back over again. This is why it's hard to trade in a gap up market, right? You'll get a lot of things that will either get stuck in a range or they'll give back. They'll retrace and fill their gaps, or they'll fill the down gap. Yeah, play. This was a nice swing, right? and now it's kind of, you know, this is only day three for this, but I kind of expected it because it was such a big move those previous 2 days. But again, it's red for the day now. Signet Jewelers. This is what I was talking about. So in the previous watch list, I talked about my concern with Signet Jeweler was whether or not it would be able to remount the 200 SMA here, right? So we got 200 SMA right here, and can it hold? Well, it remounted it, right? But now we're right back down below it. So for me to even consider this, I need a pullback to the 9 at the very least, preferably to a 20 to give me a little bit more range. But again, it's red for the day. It would have been a nice short. That I should have. That's the play I should have shorted today. Aurora Cannabis. It's kind of back to being the idiot that it has, been for over the past year. Had some really nice days here where it pressed up, right? Beat earnings and pressed up, but now it's just kind of it's going back to where it was a year ago, where it's just sideways or a continual grind down. We got OSTK here. Again, just a weak open, but again, it's kind of up there, right? So we either need some consolidation to the side so the 9 can catch up, or we need a gradual pullback to the 9 EMA, preferably a 20 so you have more range. As far as the liquid gainers for today, there were a couple on the list that I added and took off this morning. This MBR, which I'm kind of pissed at myself, right? Because this could have been a really, really nice trade, right? So let me hit this right here. So you could have taken it one of two ways. You could have taken a pullback to the 9, right? And I would have looked for a trend break here. Or you could have just waited for an actual, hold on here. You could have waited for an actual flag break, right? You could have waited for a flag break, right? You could have waited for the pennant, or you could have waited for the flag, right? I call my pullbacks to the 9 that are downwards, right? I call them the pennants. Of course, the flag break is anything that is sideways, break of the range. You could have taken this right here at around 50, between 52 and 53 bucks, and you could have rode it up to $61, right? It's an $18 move. I'm really upset with myself that I did not hit this. This was on my list. I took it off because I'm like, it's oil. I don't think it's going to hit. I don't think it's going to get back to its 200 SMA. I'm an idiot. So, again, they're not all going to be winners, and you're going to make a lot of mistakes. But other than that, that's kind of it, right? That's kind of it. And I just want to remind you all, for those of you that are unfamiliar, we offer bootcamp training services where we come and we teach you how to trade this market. We teach you 20 plus patterns on how to trade this market, how to be profitable. We have a new bootcamp that is starting on Monday, June the 8th, right? We're going to have 4 weeks of classes, 4 week of market recap, and you'll be taking simulated trades as well. So you'll have me there showing you the trades that I take every day. You'll see me trading live in front of you, as well as you'll get classes 5 nights a week from Sunday, Monday, Tuesday, Wednesday, and Thursday at 7 p.m. I am offering a nice deal since things are starting to kind of come back now. I'm offering 60% off, right? And again, use the coupon code BAILOUT60, right? Be your own bailout. Quit relying on governments, or quit relying on the government to bail out your business, your place of business, right? Whether it's your own your own business you own, or your boss, right? Or if you work for somebody who has a small business, don't rely on them to get help from the government, right? Also, quit relying on stimulus checks, right? I see a lot of people out there calling for more stimulus checks. The problem is the pandemic's over. People can go back to work. Yes, some businesses won't come back. But guess what? If you take the time to learn how to do this stuff, you don't need to work for anybody else. Listen, I'll be honest with you. For the most part, most of the days, I work about 2 hours a day in the morning, right? My day's done 2 hours in the morning. Now, I spend a lot more time during the day going through charts. I spend a lot of time at night doing the research. But for the actual work of trading, I'm usually done by 11:30. If I'm trading past 12, it's because I either didn't hit my goals for the day or I lost money and I'm trying to make some money back, right? So for the most part, I'm usually done by 11:30, 12 o'clock. And that's usually when I'm door dashing or just kind of chillaxing, watching some reruns, because there's really nothing good anymore that's new on TV. I've seen very little that I enjoy watching. But again, you can hit me up either on YouTube. You can hit me up in email. You can email me at Patrick at parabolictradingllc.com. You can hit me up there, or you can hit me up on Facebook or Twitter. Of course, you saw the social media handles in the beginning. If you want to reach me at Twitter, you can reach me at LLC Parabolic. For YouTube, you can just search for Parabolic Trading, which obviously you're watching this on now. And then, of course, Instagram, it'll be Parabolic Trading, and Facebook.com/Parabolic Trading LLC. Okay? So, again, you can be your own bailout. You can make your own money, and you can determine your own work schedule, and you will be able to determine what you will get out of this endeavor. So again, this is my trade recap for Friday, June 5th. I will over the weekend I will actually go and put together my watch list for next week. I'll probably do a live stream where you all can just watch me go through the different markets. Like I'll go through probably 2,000-3,000 charts on Sunday. Once a month I'll go through every single stock in the market. But for the most part, I'll go through. I want to be in the business of knowing what are the 100, 200, 100, 200 hottest stocks in the last 5 days, the last 30 days, the last 90 days. And that way there we'll do some sector analysis. We'll scan through the industries to find out which market rotation is probably going to happen this week, which stocks are going to be hot from which sector, and then we'll focus our plays on them, build out our swing list for the week, or our swing watch list for the week, as well as get some ideas for day trades for Monday. So again, guys, thanks for watching this. If you don't mind, please hit the like button, subscribe if you're not already subscribed to this, and hit the notification bell so you get notified each and every time I upload a new video or that I'm getting ready to go live. So that way there, you can get the information as quick as possible so you can be profitable, right? So again, hopefully some of you will join, and I'll see you on the next boot camp that starts on Monday. Until then, take your trading parabolic. Peace, guys.